$300 billion. Listen closely. That isn't the GDP of a mid-sized country. That is the amount of cash Wall Street might evaporate or conjure out of thin air in a single second. Right now, at this very moment, the fate of global financial markets isn't in the hands of the Federal Reserve. It's not in the White House. It is effectively being held hostage by one single company. Think of it as putting the market cap of 3 Intels on the table and flipping a coin. That is the reality we face this week. Nvidia's earnings report. Don't make the mistake of thinking this is just another tech company releasing a spreadsheet. Wrong. This is a global referendum on whether the artificial intelligence bubble is about to burst. The market right now is like a rubber band stretched to its absolute physical limit, and the report in Nvidia's hand is the pair of scissors that could snap everything. Today, we are going to put this company on the operating table. We need to dissect this $600 billion mathematical black hole and see if it's going to take us to the moon or crash us through the floorboards. Look at where we actually stand. The current market sentiment isn't just optimism, it is a near-religious mania. Walk into any coffee shop in Manhattan, or scroll through the Wall Street Bets forum on Reddit, and you will find everyone talking about one name. It's not Tesla, nor Apple, but Nvidia. This kind of consensus is rare in financial history, and usually, it is dangerous. Why? Because of one of Wall Street's most brutal rules, priced for perfection. Let me explain what that really means. Over the past year, Nvidia didn't just win the game. It humiliated the competition. It has spoiled Wall Street rotten. Now, analysts treat Nvidia the way a tiger mom treats a prodigy child. You got an A? Not enough. A+? Still not enough. You need to score a perfect 100, finish next year's curriculum over the weekend, and bring home a Nobel Prize in physics. That is Nvidia's current reality. Its stock price has already priced in the best possible scenarios for the next 3 years. Infinite demand, flawless execution, and zero competition. In finance, we look at something called the second derivative, the acceleration of growth. Right now, investors don't care how much money Nvidia makes. They care about whether the speed at which they make money is increasing. It's like driving a Ferrari down the highway. If you're cruising at 200 miles per hour, everyone takes it for granted. But if you ease off the gas just a tiny bit, even if you're still moving fast, the algorithmic trading bots in the passenger seat will instantly hit the eject button. If Nvidia says, hey guys, we're still making tons of cash, but growth slowed by 1% compared to last quarter, for this market, that is a catastrophe. That is why you feel the fear. When the stock price is standing at the peak of Everest, the only way to go is down. The margin for error right now is 0. Let's go deeper. Let's talk about the real money. You have to understand that this AI boom isn't just a technical revolution. It is effectively a Cold War, not between nations, but a battle for survival between the big four of Silicon Valley, Microsoft, Google, Meta, and Amazon. These companies are trapped in a classic prisoner's dilemma. Imagine you are Sundar Pichai, the CEO of Google. Do you know for a fact that AI will generate massive profits right now? Honestly, no. Current AI applications are mostly chatbots and coding assistants. The revenue from these doesn't even come close to covering the cost. Do you want to stop burning cash? Of course you do. Your CFO is probably screaming at you every day to cut costs. But can you stop? No, you can't. Because if you stop, and Satya Nadella at Microsoft keeps buying chips and training more powerful models, Microsoft's Bing becomes smarter than Google Search. Even if it's just a little bit smarter, your search business dies, and your advertising empire collapses. This isn't about growth. This is about survival. So even if they are bleeding money, they have to dump billions into Nvidia every year to buy those expensive H100 and Blackwell GPUs. For Nvidia, this is obviously fantastic. They are selling shovels to gold miners, and they have a monopoly on the shovels. But there is a massive mathematical hole here. Sequoia Capital, one of the world's top venture capital firms, has already sounded the alarm. Let's do some simple math. To justify the hundreds of billions these giants are spending on hardware, the AI industry needs to generate roughly $600 billion in incremental revenue annually. Listen to me, $600 billion, but the reality is cruel. If you add up all the AI software subscriptions, all the API fees, and all the AI art tool revenues globally, you only get to a few tens of billions. There is a gap of over $500 billion. It's like building $1 million luxury restaurant, but only selling a few $100s worth of hot dogs a day. This is the bubble we worry about. People are buying Nvidia not for today's profits, but for a future dream. It is a spending spree driven by fear. The tech giants fear falling behind, so they panic buy chips. Retail investors fear missing out, so they panic buy the stock. But here is the risk. Fear is not sustainable. If one day Wall Street investors tell these giants, enough, we want to see cash flow, we want to see profits, stop selling us dreams, and just one company say, Meta decides to cut capital, pushes next year, the whole house of cards collapses. Nvidia's orders would vanish instantly because its customer base is too concentrated. We are betting on how deep the giants' pockets are and how much pain their shareholders can tolerate. Beyond the business logic, Nvidia faces two very specific headwinds. These could be the black swans for this earnings report or the coming months. First, physics. Literally, the laws of thermodynamics. All eyes are on Nvidia's new Blackwell chip. This is their nuclear weapon, claiming performance many times that of the previous generation. But rumors are swirling in the supply chain that this thing runs too hot. It acts like an oven in the server racks. You have to understand, a data center isn't just a pile of laptops. When thousands of these super chips work together, the heat is staggering. If they can't solve the cooling issue, servers overheat and crash. Reports suggest Nvidia has had to redesign server rack layouts, causing delivery delays. In tech, time is money. If Nvidia is 3 months late, it's a gift to the competition. AMD is watching like a hawk. Their chips might be slightly less powerful, but if you can't buy Nvidia, or if Nvidia burns down your server room, you buy AMD. This attacks Nvidia's sky-high gross margins. And if margins drop, that perfect valuation model collapses. Second, Washington. Let's face reality. We are on the eve of the Trump 2 era. Regardless of your politics, as an investor, you must acknowledge one thing. Tariffs and protectionism are coming. Nvidia is a global company, designed in California, manufactured by TSMC in Taiwan, packaged in Asia, with customers everywhere. If trade barriers go up, or if the US government bans high-end chip sales to the Middle East or other regions for national security, it's like chopping off an arm. The policy risk is extreme. You could wake up tomorrow to an executive order that bans shipments to a key market. That is an asymmetric risk you cannot see on a candlestick chart. Okay, I know what you're thinking. Your palms might be sweating. You're thinking, this sounds terrifying. Should I sell everything, stuff the cash in a mattress, and buy gold and canned beans? No, absolutely not. In financial markets, the word crisis, WAGE, is composed of danger and opportunity. If you know how to play, this is exactly when money is made. Volatility isn't your enemy. It's your friend if you know how to ride it. Here is your playbook. These are the strategies hedge fund managers won't tell you for free. Take notes. Rule has shown. Don't be a hero. Do not gamble on options before earnings. Just don't. I know you've seen the screenshots on Reddit where someone turned $500 into $50,000 overnight. That is survivor bias. That is a lottery ticket, not an investment. During earnings season, especially for a focal point like Nvidia, the implied volatility, the price of the option is astronomically high. This means the market already expects a massive move. For you to make money, the stock doesn't just have to go up. It has to go up more wildly than the market expects. If Nvidia reports great numbers and the stock goes up 5%, but the market priced in a 10% move, your call options will still lose money. This is called IV crush, volatility crush. It is the classic way market makers harvest retail traders. Keep your hands in your pockets. Don't try to pick up pennies in front of a steamroller. Rule #2, core and satellite strategy. This is how the pros survive turbulence. Put 80% of your money in core assets. What is core? The S&P 500 or the NASDAQ 100? This is your bulletproof vest. If AI is the future, the big companies in these indices, Microsoft, Apple, Google, will benefit. If Nvidia rallies, the index rallies. If Nvidia crashes, the index will dip, but it won't bankrupt you. Then, use the remaining 20% money you can afford to lose as your satellite. With this, you can be aggressive. Buy Nvidia stock directly or a semiconductor ETF. If the satellite crashes, you survive because your core protects you. If the satellite goes to the moon, you generate massive alpha excess returns. This is asymmetric betting. You cap your downside but keep the explosive upside. Don't put all your eggs in one basket, especially when that basket is strapped to a roller coaster. Rule #3. Buy the water sellers. If you think chip stocks are too expensive or too stressful, change your perspective. Regardless of who wins the AI war, OpenAI, Google, or whoever, one thing is 100% certain: artificial intelligence is an energy-devouring monster. Training one large model consumes enough electricity to power a small town for a year. Future data centers aren't just warehouses full of chips. They are essentially computation factories built on top of power plants. Without power, the best chips are just scrap metal. Look at utilities. Look at nuclear energy. Look at grid infrastructure companies. Companies like Vistra Energy or Constellation Energy. They aren't as sexy as tech stocks. You won't brag about owning a utility company at a cocktail party. But the certainty is incredibly high. When everyone is digging for gold, the smartest people aren't digging. They are selling water, denim jeans, and shovels. In the AI age, electricity is water. This is the most solid bet on the board. Rule #4. Stop loss is your god. If you already hold Nvidia and you've made money, congratulations. But don't let greed destroy you. Use a trailing stop loss. Don't try to guess the top. Nobody knows where the top is. Not even Jensen Huang knows. Maybe it goes to 150, maybe 200. Maybe it falls to 100 tomorrow. Set a retreat line of 10% or 15%. Tell your trading software, hey, if the price drops 15% from its highest point, sell everything. Don't ask me why. This way, if the stock keeps rising, you ride the wave. But the moment the trend reverses, the machine locks in your profits automatically. Do not hesitate. Do not fall in love with a stock. The stock doesn't know you own it, and it doesn't care about your feelings. You might not sell at the absolute peak, but you will never ride the roller coaster all the way back down to zero. Finally, some real talk. Watching the numbers flash on the screen, seeing the headlines about overnight millionaires, it is easy to catch FOMO, fear of missing out. We are terrified that if we don't jump in now, we'll be left behind by history, destined to be poor forever. But friends, remember the lessons of history. In the year 2000, Cisco Systems was the Nvidia of its day. It was the backbone of the internet, the center of the world. Everyone thought it could never fall because the internet changed everything. It was the most valuable company on the planet. The result, after the bubble burst, it dropped 80%. Even though it remained a great company and kept making money, its stock price took 20 full years to crawl back to its previous high. If you bought Cisco at the peak, do you have 20 years of your life to wait for a break even? Great companies are not always great stocks. Especially when everyone knows they are great, the price is often overdrafted the next 10 years of perfection. In this market full of noise, in this casino where algorithms are faster than you and insiders know more than you, the most expensive asset you can own isn't a hot tip. It is patience and discipline. Don't be hijacked by your emotions. Stay clear-headed. Leave your feelings at the door and bring your calculator. In this crazy party, only the people who keep one eye on the exit can take their money home safely when the music stops. Those are the rules of the game for this week. No matter what happens, remember, you have to survive to play another hand. Good luck. See you in the market.